What's going on, people? It's GBP baby. Welcome to another video. It is currently 4:16 on Sunday the 18th of June 2023, and what a week we've had. Last week was way more expansive than I anticipated. If you watch my Thursday's video, you'll see I had a target marked out on GBP, and we went way above that into highs that I never knew we were going to reach in one day, especially on a Friday. But that was interesting to see. However, we're going to start with DXY today, and yeah, so I'm going to start on the weekly graph. You can see that this is wait a minute, sorry, this is the daily, right? Okay, yeah, we're going to start on the weekly. This is our weekly candle from the previous week, and you see how we pushed right through down, taking out lows here and here, and started pushing into this bullish order block we have resting here. One thing I want to bring our attention to is this fair value gap. So this is now an inverted fair value gap. It's been traded on the upside, and then we've traded through it on the downside, meaning that this is now a bearish fair value gap, meaning that this should now provide resistance if we are to return back to it. So I'm going to mark that out first. When we see, and when we see price pass through like this so aggressively too, if price is to return to it, I'd see this as an area to sell, assuming we are still bearish. So I'm going to put weekly inverted fair value gap. And then I'm also going to mark out the opening of this bullish order block. So I'm going to use these two candles and use this as the opening. And I'm going to put bullish order block opening. We'll make that black. And then if we drop down to the the daily, we can start to have a better idea and clearer idea of what's been going on. So you can see that this weekly fair value gap was created here, and then below this we have another fair value gap that's been created on the daily. And this daily fair value gap, you'll notice it was created at the same time we passed through this bullish order block. So these are two confluences I see as a reason as to why I want to see lower dollar. I see the way that it's created these fair value gaps and the positions in which they've been placed. I'm starting to see some kind of defense being created on the buy side, on the upper side of the market. So I'm going to mark these out and I'll show you what I mean in more detail. Also, hello to all my new subscribers. Welcome. So this is a daily fair value gap, and I'll make sure that's only visible on the daily and below. And then we've also got this bearish order block here, so I'm going to mark this out and I'm going to drag it right through and make it layer below that actually. And this is I like to call this, again, if you've been watching my videos, you know I like to call this an inverted order block, because I believe that this should now act as resistance if we are to trade back into it. And I'm going to change the color of that, and I'm going to make it what color shall we make it? Let's make it a darker blue. I do want this on top. This video is likely going to be long, guys, by the way, because you can see that I'm going to be annotating everything live as I'm making the video. And so bear with me. How do I bring that to front? Oh yeah, okay, there we go. So I'm also going to mark out the 50% level off this, and I'm going to mark out the 50% level off this. Why? Because the 50% level off of order block is a mean threshold, which is the lowest price or highest price should trade to and close above or below for us to remain bearish. Let me explain that again. So if I draw out the 50% level of this, that is the highest I want price to trade to and close below before for me to remain bearish. If it closes above that, then it's another story. Same with the daily fair value gap, 50% of this, that's consequent encroachment. I want price to remain below that for me to remain bearish. So I'm going to do that now. 102.567. And I'm going to make that thinner, I'll use a dotted line and I'll make it red, and then we're going to do the same here. It seems a bit extra, but at the same time, it'll be interesting to see how price does treat that level if it is to trade back up into this area, which I am anticipating to some extent. 102.545. So we've also got this imbalance here, volume imbalance. You can see that there's no volume here, so I'm going to mark that out. I expect price to want to draw into that completely, as in I would like to see it close over it, is what I'm saying. So I'm going to have that marked out. Although we wicked through it, you can see price has remained above it, so I am waiting for price to want to close below that, and then this would again act as a line of defense in order for us to push into lower prices. And obviously we have this massive fair value gap, which I do believe price is going to be reaching for in general on the sell side. So I'm going to mark this out as a more longer term objective. Make that yellow. And you'll also see another volume imbalance here. So if I draw this out, you can see how that layers within this fair value gap. So it'd be interesting to, again, this is a confluence of reason as to why I'd want to see downside get positioned. I'd like to see downside price action around this area. Alright, so I did just pause my video. I had to do something, so I'm going to try and get straight back into things. So I think I believe we'll look at this fair value gap, and then I marked out this. So this volume imbalance, the way I'm seeing it is that because there was no trading here and we traded through it here, that means to me there's only now upside trading that has happened here. So it's now lacking sell side as far as I'm concerned, which is why I'd like to see sell side get delivered into this area. And it also seems that the 50% level lines up pretty much with the opening of this liquidity void, which is nice to see. If this stays open, I do see this was a breakaway gap, because breakaway gaps don't get filled in, meaning that this entire yellow area, let's make it a bit more clear. So this area, the orange area, if this remains open, this can still act as a breakaway gap, which would then push us into higher prices. So that's again, this is all information I've learned from ICT recently. He's been talking a lot about fair value gaps, breakaway gaps, etc. And he preaches how breakaway gaps never fill in, and sometimes they don't even fill in at all. So like I said, if we are to just trade into here, it would be the 50% level, which I'd want to see it trade to for us to expect higher prices after that. So I'm going to mark that out. 101.872, perfect. And I'll see that as a potential draw on liquidity for looking into in the following weeks price action. One thing that I also wanted to bring to our attention is if we look at the total range that we're trading in, and I'll mark it out from the weekly. So I'm going to use this low to this high. Why am I using this low and not this low? This low, lowest closing body. It's an order block. And this is the lowest closing body, so I want to use the wick of that, which is the reason I'm going to put my Fibonacci from here up to here. Excuse my voice, I have hay fever. And yeah, so I'm going to do that like so. And you'll notice that on the daily, we'll go to the 4 hour actually. Things are starting to look quite messy, but you'll see how we aggressively traded through this 50% level. When I see price action like this, it suggests to me that we are likely to push lower for lower prices, which is another reason I want to see us dip down into this liquidity. Furthermore, I am expecting us to come and kiss this 50% level goodbye at some point, whether that's next week or in a few weeks, probably later. Then basically I am anticipating us to trade back into this 4 hour fair value gap and at this 50% level where this weekly inverted fair value gap is. However, I doubt that's going to happen anytime soon. Like I said, I'm expecting a lot of resistance to be caused by this daily fair value gap for us to want to push lower and dip into the south side liquidity. Furthermore, there's a wick here. Again, this is what I'm about to say is based off ICT's recent content. He talks about how wicks are ranges, and that the 50% of wicks, especially if you're in a sell program or if you're selling, you should definitely have the consequent encroachment of wicks as a target, because it's very easy for price to come down to that and then turn around. So I'm going to mark that out as a 4-hour consequent encroachment, and this is the lowest time frame I'm probably going to go with dollar today, 772. I'll make this one a little bit thicker, and I'll put 4-hour consequent encroachment. And you'll see how that's positioned quite nicely underneath that fair value gap we marked out on the higher time frame on the daily. So that's pretty much everything with dollar. I'll just explain one more time what I'm expecting. I'd like to see us trade down. I'd like to see us dip into this daily fair value gap. I don't really want to see it. I don't want to see it close. I'd rather not see it close. And I want to see us push lower, take out these lows, and dip into this outside liquidity. Right, so now we can head on to GBP. Although if you look at my community tab, you'll see that I mentioned that this week I'm likely going to be focused on euro. This is due to the fact that GBP had such an aggressive week this week that I'm expecting heavy consolidation. So I'm not expecting much price action to be going on with the GBP. So yeah, I'll get more into that in a second, but we'll look at GBP's week. As you can see, we have that here. You can see we push right through this fair value gap, closing literally at the top of this, closing in that fair value gap, and then we have another fair value gap resting just above here, which it is likely we are going to want to dip into, assuming lower dollar. So right, let me see. So this is the monthly fair value gap. I'm going to mark out the 50% level of that, and you'll see how we just tapped into that last week, 336. And basically, I just want to see how price treats this consequent encroachment. If we trade away from it, which I'd like to see, I'd have a little bit more hope in terms of us wanting to reach down into the fair value gap that was created on the daily. I'll show you that now. Into this. So you can see we wicked up and then we traded away. It's typical for price to want to, tipper tapper back into there, take out any sales, any buy stops above here to trick retail, and then want to turn around. There's justification for that. If we look on the 4-hour, there is a small fair value gap resting just above this red level, which I have my eyes on, and a swing high. So I'm going to mark out the swing high first, and I'm also going to mark out this 4-hour fair value gap. Actually, we don't even need that. And I'm going to make this red. Ooh. Now, as you can see, we have already wicked into it, but I'm expecting price to want to actually completely trade into that. So as price is trading into this, that's when I'd like to be seeing dollar pushing lower into this fair value gap. After that, I think pretty much the target for price would definitely be trading back into this massive daily fair value gap that was created on the way up. If this remains open, as in if we trade back into it and we stay above the 50% level, it is likely for price is going to want to push even harder into this monthly fair value gap and probably close it. So I'm gonna draw out the consequent encroachment of this fair value gap as well on the daily, and I'm actually going to start marking out what everything is because I'm going to be so lost. 1.27339. That's fine, dashed, and this is the daily fair value gap. I am going to get rid of this massive orange box because that's going to distract me, but we know that we are currently in a monthly fair value gap. I'll write down this here, monthly 50%. There we go. And then this is a 4-hour fair value gap on top of swing high. Yeah, the swing high. Yeah, 4-hour fair value gap. I'm gonna make this orange, and then we can start to frame what I'm expecting in terms of this. So we've traded up into the monthly fair value gap, wicked away. I'd expect us to tipper tapper right up, fill in this fair value gap, and then hopefully turn away and start trading into this daily fair value gap that we left last week. But obviously, because of how aggressive GBP's moved, my probability in terms of what I'm expecting is like it's gone off the charts, pun intended. As in, like, I'm not very confident at all, in all fairness, which is why I'm going to be focusing more so on euro this week. So yeah, I'm not going to speak too much on pound, but just know that I've got my eyes on this fair value gap, and obviously I want to see how price treats this one if it does manage to trade above there. So I'm going to go straight to euro now. And I'm going to look at the weekly. And you can see that euro, it looks a lot more like dollar in terms, well, on the inverse, which is nice to see, unlike pound, which is doing our own thing as per usual. So the first thing that I want to draw up our attention to is this volume imbalance. You can see there's no trading here. It's likely that price is going to want to shore into that. So I'm going to leave that out and type in weekly volume imbalance. Weekly volume imbalance. How long have we been going? 17 minutes. I'm going to try and finish up soon. And then if we look at this week, we can see what we've traded through. So we've traded through this fair value gap while we've closed it, which is nice to see. And when price closes a fair value gap, it's likely that it's going to want to continue to trade through it. So this should now act as an inverted fair value gap. I'm going to mark out the 50% level of that. And it's the same, exactly same logic as I've been using this whole video, which is if price remains above this 50% level, then I'm bullish. Now you will notice this massive daily fair value gap, which is also on euro. And you'll notice that it's below this 50% level. Now, obviously, on the daily, if we trade down here, it's going to look different on the weekly. So, let's say next week we do trade down here. On the daily, we may be closing below this 50% level, but this is a weekly fair value gap, meaning that if we are to close higher, which I'd want to expect, then that will simply be a wick, which would then justify why price closing down here. I mean, price trading down there on the daily is okay. Obviously, it depends where we're open. Obviously, it depends where we open, and we have to remember that Monday's trading is going to say a lot, and it's going to be a lot more clearer after that. So I'm going to also mark out this daily fair value gap, because obviously I wouldn't be surprised if price tipped into it. If we are bullish, I'd like to see this left open. Obviously, we can trade into it. Where to? Consequent encroachment. And you'll just see how, like, I'm pretty much repeating the exact same logic everywhere and applying it everywhere. Now, I don't know if this is just me having a little obsession with consequent encroachments, or it's because my understanding of price action has improved, because I know that I want to see price respect this level on the weekly and respect this level on the daily. But we're all learning here. So that's going to be orange. And then, so yeah, as far as I'm concerned, if we're bullish, this should remain open. I see this as a breakaway gap because there's no other gaps on the way up on the daily except for here. So for us to want to move higher into these into these highs here, into this buy side liquidity, for that to happen, this needs to remain open because a breakaway gap should not fill in. Hence why I've marked out the 50% level as the reach. I'm also going to bring our attention to this fair value gap and mark that out. You can see that we traded on the downside and then we traded on the upside. So this is now an inversion fair value gap, meaning that if price returns to it, what should it act as? Support again, more reason why prices to reach down here, we should want to see it turn around at this point. So I'm going to make this daily FVG. This is the weekly FVG. Inverted now. This buy side liquidity, I'm going to thicken that line, and then we'll drop down to the 4 hour, and then we'll bring the video into a close. So you can see how we're consolidating on top of here. We created a swing low. I imagine this is engineered. Obviously there's a much bigger fair value gap. There's another fair value gap on the 4 hour. I'm not going to pay too much attention to that because you can see where I want price to be drawn to, which is clearly between this 50% level and this 50% level. But yeah, that's pretty much everything, to be honest. Whether we have whether we are able to reach that buy side liquidity next week is another story. In all fairness, I don't know how bullish euro is going to be. You can see that we traded into this bearish order block here, and we have another one resting here. So I'm going to mark this out as an area where we are likely to experience resistance, because that's the open of a bearish order block. So bearish OB open. And yeah, that's pretty much everything, guys. So what am I expecting for euro? Again, I want to see us trade. I do want to see us reach into this fair value gap. I don't want to see us trade below the daily 50% level. And I do want to start to see higher prices. Again, whether this could happen in a week or 2 weeks or 3 weeks, I have no idea right now, purely because of how the markets have been moving and how crazy GBP has been. DXY, I want lower prices overall. But yeah, I guess we have to wait and see. Monday, I don't trade Mondays. After Monday, we'll have a much clearer idea of After Monday, we'll have a much clearer idea of what price wants to do. And yeah, that's everything. This has been GBP, baby. Don't forget, next week I'm likely going to be focused on euro dollar. So it's going to be euro, baby. And I'll catch you in the next one. All of my screenshots from my analysis today will be available on the Discord. I'll leave a link to that below. So make sure you guys join. And yeah, thanks for watching, and I'll see you tomorrow. Peace.